Hey guys, Tony here. I will be looking at, after looking through the 52-week scrubs and looking at the, what is it? I think it's Market Beat, the website. I found Equifax. Generally a pretty good company, right? But overall, I am looking at using the breakout strategy for Equifax. It does look like it's going to be pretty solid as far as breaking up to the upside. Again, we're starting this just by adding the fibs. Relative high, relative low, down to either, February 22nd week of or March 1st week. We'll do March 1st. We'll set up the fibs right there. Right now, we are looking at, let's see what this is. As far as movement goes, I can say 5% down. I think for the forecast, we'll do a 5% down. And then for rectangle, as always, 277.26, 277.33, that's fine. Pretty close by right there. Spread it out to the upside at our lines of, at our take profit. First zone or first section, 277, then 291, and then our last take profit is going to be, make it 305. And then I always like to check on the upside just to kind of get a general idea of what the actual gain could be. So we'll add it right at 250 where price is currently. And first take profit, it looks like we can expect almost 100% gain from this. As I told you guys before, generally any 10% increase in a stock, when that's my little girl and she wants to go to bed, so I'm gonna try to do this video quick. Generally when a stock wants to go up, goes up 10%, you're looking at the underlying option generally doing about a 10x. So you can expect 100x or 100% gain from Equifax if it does hit that 277 mark, which again is about 10% gain towards the upside from current price. We can go ahead and delete that, but again, what are the current confluences that we are looking for? So, I hate. Let's see if I can put the text right. This video might be a little bit longer than other videos. So let's look at the confluences, right? Confluence number one, it's breaking or broke relative high. Two, we have the 50. We have the 50 MA over the 200 MA. And number three, whoops, we don't need that. Let me take that off. I'll set it right there just so you guys can see. So we need generally at least three confluences. So the first one is it broke the relative high right here. It closed on top. It actually did that last week, July 6th, the week of July 6th, and now it's generally headed to toward that upward direction, right? So that's confluence number one. Confluence number two is we have the 50 MA trading over the 200. And right now we do have the reverse MACD giving us those bullish signals. And we do have the Stoke on the overbought section. So I would actually consider this whole setup actually one confluence. So we can go ahead and add, reverse MACD is bullish plus, the stochastic is overbought. Again, I would consider this as one confluence. We're not looking that wouldn't be considered two. So just on these three confluences, I would already take the trade just because of the fact that we're actually three confluences. I tend to only really go about it by three, and then if we have any more, that's just even more towards the upside. But again, Equifax currently right now, it's been on an uptrend since March 2020, which I don't actually like to see because it's actually only been trading towards the upside since after the pandemic, right? But again, it's been on a pretty consistent uptrend ever since March 2020. It's pretty, you can spot this relatively easily, right? You have the pretty easily spottable trend towards the upside, right? So again, that's confluence number four. We'll just do uptrend on the weekly. You got your option on the weekly, and then if we can find any more, then fantastic. If not, this is plenty enough to actually what is it called? It's plenty to actually give us what is it called? Basically the go-to to take the trade. What I do like to recommend you guys do is look at the actual jumps. Look at the jumps in price. So you guys can see the relative high was back here from December 28th, the week of, and the week of December 14th, right? So what happened? You had a huge candle towards the upside, and then it kept going up for about another month, for like 3 more weeks, right? And then the last break in price was actually right here, back on what, June 8th, June 1st, the week of, that was the relative high, and then it went up, had a huge spike towards the upside, one more spike, and then started trading sideways. So the thing here is, what Equifax likes to do is it likes to create these huge jumps towards the upside. You guys can see these big candles, right? Big candle, big weekly candle, you know, big weekly candle. It hasn't done that yet. So just by historical price action, we can expect some sort of big price candle up like that for the weekly. So I would definitely take this just on that. But it does look like if it doesn't hit in the next month or so, it's gonna tend to trail down and not actually keep moving towards the upside. So we can expect is something like this. Move to the upside, and then from here, it might actually do this, and it might not even hit your first TP, which is the bad part. So my recommendation, what I'm probably gonna do is I'm probably gonna buy a month out contracts from here, possibly tomorrow, because we're already at the end of the week. You guys know that I only do my breakout strategy closer to Thursday and Friday, because that actually gives us a solid confirmation of how a candle is going to close on the weekly, right? We're like 95% sure that this candle is going to close bullish on the weekly, right? But again, what you can expect as this run up to the upside, more than likely it's going to start trailing down. I'm still waiting for a big push like these last candles that it had back on the week of what, April 19, December 7th, and also back here on June 1st, right? So I am expecting a big move towards the upside, but again, I'm not actually expecting Equifax to hit that first TP, just because historically it doesn't do that. So again, I would probably let this run maybe to like 270, and then probably take out all my profit there, just because historically it doesn't actually like to hit the first TP, let alone the 1.618 on the fibs, right? So again, Equifax, you have to really look at every single ticker specifically on its historical performance. You can't buy something and be like, oh, this is gonna run up 1,000% in a month. No. You have to look at the movement. Walmart moves slow, Target moves slow, Starbucks moves slow, McDonald's moves slow. So again, if these relative highs get broken, you need to play this out on the relevancy of the actual stock. So every single time you do this strategy, you have to play it out dependent on how the actual stock moves, right? You can't expect every single play to be a month out. Sometimes you're 3 months out, and they won't actually hit their first take profit or even the fib price until 3 months out. So again, the next play that I'm looking at is actually Equifax. I was looking at Starbucks, but Starbucks actually had a pretty big drop to the downside today. And it didn't even break relative highs, right? I mean, it didn't break anything. We didn't have a candle close above this, and I don't think it's gonna have a candle close, right? I would be comfortable buying Starbucks if it closes tomorrow somewhere like 120 and above. I would comfortably buy Starbucks, because it does tend to move on the upside pretty nicely as soon as it breaks relative highs, right? So generally about a month or two out is what I would probably recommend for Starbucks. But again, it's not breaking relative highs yet, so I would not buy into that. Equifax, what did I do? EQFX? Equifax, there we go, that's what I was looking for. But again, Equifax, pretty solid, but for this one specifically, I would not be looking at the first take profit. I would probably be something lower, like a 270. So I hope this explains, a little bit better about how I look into these stocks. I generally tend to see what everything is giving me, and that's why we have those 4 confluences up here. Again, we have the breaking or the broke the relative high, which it did back last week. 50 MA over the 200. We have the reverse MACD is bullish and the Stochh is overbought. Again, we're using both these indicators as one confluence. and we have the uptrend, the consistent uptrend on the weekly. So basically taking the trade off of that, have 4 confluences, and I think we're pretty solid to go. So as far as this one, I will be playing it about a month out. We'll see how it turns out. I'll see you guys later.